Your RIN TV on-demand video will begin shortly. Meanwhile, be sure to register for RIN TV alerts by clicking on the link below. I'm here with Sanford Elsass, chairman of the National Risk Retention Association. He joins us from Burlington, Vermont, where he is attending the Vermont Captive Insurance Association meeting. Mr. Elsass, welcome to the program.
Marisa, I'm delighted to be here.
First, tell me a little about the National Risk Retention Association.
It's 25 years old this year. We're celebrating our birthday. We refer to NRRA as NARA, so as a shortcut. We are here to defend the Liability Risk Retention Act, which we've been doing successfully for 25 years. That's our primary mission.
What are the top issues being discussed at the Vermont Captive meeting this week?
I think it depends on what kind of captive you are or risk retention group, but I would think on a national basis the Dodd-Frank legislation and how it could impact captives is primary. I believe the Federal Insurance Office and its creation and the fact that it has umbilical cords to three different agencies, Health and Human Services, Labor, and Treasury, all of whom have different missions and different ideas on how the FIO should work. And I don't believe there's a lot of embedded insurance knowledge and experience in those three agencies, so I think that's a concern to the people here.
What are you hearing about the market?
There's some hardening of the pricing, particularly in the medical malpractice risk retention groups that represent about 65% of the RRGs in the United States. And also, I think reinsurance has been less expensive going forward.
So what is your outlook for the rest of the year?
Well, the rest of this year, I believe, is still bright. I think those risk retention groups and captives that have a built-in audience of people who represent a small known community are not really competing in the open market, and they're going to be fine. I believe that the larger risk retention groups and captives who compete in the, well, particularly risk retention groups who compete in the open market against the large commercial carriers who have continued to have predatory pricing to try to run the risk retention groups out of the business. I think it's much more difficult, but the industry at large is looking at several losses due to catastrophes, and maybe that'll influence pricing to where some liability hardening of the pricing could occur, at which point RRGs are going to be fine.
Mr. Elsass, thank you for joining us.
Marisa, it's been a pleasure. I enjoyed meeting you, and thank you very much.